Hi everyone, and welcome to this short introduction to Nokia's fourth quarter 2022 financial results. My name is David Mulholland, and I'm Head of Investor Relations, and here with me in Espoo today is Pekka Lundmark, our President and CEO. Please note that during this short video, where we discuss Nokia's financial performance in terms of growth rates, it's on a constant currency basis, and where we talk about margins, it's on a comparable basis. You can find full reconciliation tables to our reported financial figures in the financial report on Nokia's Investor Relations website. With that, let's get started. Pekka, we've just reported our fourth quarter 2022 financial results. Could you give us a quick overview?
Thanks, David. At the start of 2022, we said it would be a year of acceleration for Nokia, and I'm pleased to say we delivered. For the full year, we achieved 6% net sales growth, a strong acceleration from the 3% in 2021, and we also finished the year with good momentum, growing 11% in the fourth quarter. Our operating margin was stable in 2022. From my perspective, this was a strong result considering the 150 basis points of one-offs that we benefited from in 2021. This illustrates the strong underlying progress in the business.
Thank you, Pekka. One area that did end quite differently to how you expected was Nokia Technologies. Can you explain a bit about what happened in the fourth quarter?
You're absolutely right. It was quite different. As you know, when we published our Q3 results, we said that delivering stable operating profit for the full year would depend on closing some outstanding deals, which continued to be in litigation and renewal discussions. Courts around the globe are validating our position and our approach remains unchanged. We will defend the value of our portfolio over achieving certain timelines. What happened in Q4 was that late in the quarter, we received notice from a long-term licensee exercising an option to extend their license indefinitely. This triggered revenue recognition of the outstanding 305 million euros deferred revenue for the contract that would have otherwise been recognized in future periods. This license had been prepaid, so it did not actually have a cash impact on the business, but it meant operating profit was largely stable in 2022. I would also like to add that I'm very pleased with the announcement we had earlier this week that we had signed a multi-year patent license agreement with Samsung.
And if we move on to the other business groups, Network Infrastructure had a very strong fourth quarter with 14% growth. What was it that drove that?
Yes, it was great to see another strong performance from Network Infrastructure to end the year. Network Infrastructure has strong technology differentiation, but in my opinion, deserves more recognition than it typically gets externally. One thing to note in Q4 is that while fixed and submarine networks have been growing well for some time now, we saw strong acceleration in both optical networks, which grew 21%, and IP networks, which was up 11%. We also saw great profitability in the quarter at 16%, and the demand outlook remains strong for 2023. It is our technology strength across the Network Infrastructure portfolio that is driving these results.
And in Mobile Networks, you delivered 3% growth in the fourth quarter, but we saw margins decline year-on-year. Does this start to worry you?
Mobile Networks Q4 came in pretty much as we expected, and there was an impact on profitability in the quarter. This was largely due to a shift in regional mix and some front-end loaded spending in North America in 2022, which exacerbated the regional impact in Q4. But it is important to note that on a full year basis, margins expanded 90 basis points in Mobile Networks to 8.8%. The reset we completed in 2021 has put the business on a much stronger footing and on a growth trajectory to deliver double-digit operating margins in the longer term.
And one of the questions we've received frequently from investors in the last few months has been how Mobile Networks navigates through 2023. How do you see the outlook?
Well, as we look into 2023, even as some developed markets like North America mature, other markets like India are just starting to ramp up. So we see the addressable market for Mobile Networks continuing to grow. With the recent deals won, we believe we are in a strong position to outperform the market. From a profitability perspective, While the regional mix will be a headwind in 2023, we believe this can be largely offset by scale benefits, product cost improvement, and supply chain normalization.
And Cloud and Network Services grew 5% in the quarter, and gross margins expanded by 200 basis points. Are you starting to see the benefits now of the hard work in rebalancing the portfolio playing through?
There has been a lot of hard work ongoing to refocus our investments in CNS, and yes, I do think we are starting to see that bear fruit. There is clearly more work to be done, but this is better positioning us for profitable growth in the future.
And one of the standout that we saw in the fourth quarter was the growth that you had in enterprise. Was this just a one-off?
We said 2 years ago that diversifying our customer base and growing in enterprise was a strategic priority for us, so I'm delighted with the strong momentum we now have. While the 49% growth in Q4 might be somewhat exceptional, I'm pleased with the 21% growth for the full year. And we are broadening our customer base with momentum in private wireless and web scale, both of which should continue to grow well in 2023.
And then if we start looking forward, how do you see the outlook for the business into 2023?
While there is obviously a lot of uncertainty about the global economy, we are currently forecasting another year of growth. We forecast full year net sales of between 24.9 billion and 26.5 billion, which would imply constant currency growth of between 2% and 8%. From an operating margin perspective, we are currently targeting between 11.5% and 14%. The growth we are expecting will, however, mean that we will have another year of somewhat weaker cash flow and expect free cash flow conversion of between 20% to 50%. Overall, we see a lot of opportunities heading into 2023. And while we will continue to be vigilant for any indication of changes in customer appetite, we intend to take another step towards our long-term target of growing faster than the market with at least a 14% operating margin.
Now, one final question from me, Pekka. In terms of cash generation, Nokia had 2 very strong years in 2020 and 2021, but cash generation has been a little bit more muted than in 2022 at 27% conversion, and the outlook you've given for 23 suggests it's still at a somewhat more lower level at 20 to 50% conversion. Where's your confidence in the ability of the business to generate cash in the future?
Clearly, cash generation is of critical importance to us, but as we start to accelerate growth and considering the regions we are growing in, that will consume some more cash in working capital. Also, while the supply chain situation has improved, lead times have not really normalized yet, and so we continue to hold more buffer stock. So yes, short term, we will see some headwind as growth accelerates and working capital expands. However, I'm very confident in our long-term ability to generate cash and that we will see significantly stronger cash flow in 2024. It is because of our confidence in our outlook and our strong balance sheet position, the board is proposing an increase in the dividend to 12 cents per share in respect to 2022. And we are continuing to execute on the 600 million euro share buyback program announced last year.
Have you got any final remarks before we finish, Pekka?
I just want to say a big thank you to the entire Nokia team. There were a number of challenges we had to overcome throughout the year, but I'm delighted we still managed to deliver on our guidance, accelerate our performance, and demonstrate the resilience of our business. Thanks to the team, we have put ourselves in a strong position for 2023 and beyond.
Thank you, Pekka, for your time today, and thank you to everyone for watching. During this video, we have made forward-looking statements, and these statements are predictions that involve risks and uncertainties. Actual results may therefore differ materially from the results we currently expect. We have identified such risks in more detail in the Risk Factors section of our 2021 annual report on Form 20-F.